good information about the North American ecosystem. But now we move to what are the three big trends, as always we've done with the previous other geographies as well. What are the three key areas that we saw significant movement in the last year? And one was this incredible topic called SPACs, special purpose acquisition companies. What are they exactly? Why were they so hot at the end of 2020 and early 2021? And how has that impacted the industry? Fitness, we will continue because it's just so big, but we will talk about fitness from the perspective of what actually is happening with big tech. We covered that topic. What is Facebook, Amazon, Google? What are these guys doing in this space, really? And the third one is betting, because that is such a big topic in North America. We'll dive into that a bit more as well. Yep, as I said, SPACs is the first one. FANGs getting active in big tech, and sports betting unleashed because it's really raising the stakes. All right, let's start with SBCs. What are special purpose acquisition companies? If for the uninitiated, I'll give you a quick brief, right? It's basically, also called blank check companies. They are basically companies where there is a bunch of money which has been collected. This company is already listed, right? But they don't have any product, no service. They don't really offer anything. If they've just gone through a lot of the paperwork to get listed already at a base share value, usually at $10 a share, and they've collected a lot of money from private investors, might even be public investors, and they're just, it's kind of like they're sitting there with a net, with a big bunch of money, and they're sitting with a net trying to cast it on to some company that they will acquire. And when they acquire this company, that company immediately goes public, rather than a company going public themselves, which can take anywhere from 3 6 months to even a year. Going public through an SPAC means you cut that process down to even a month, 45 days. So it's it's a much faster way of getting companies listed. Think about, this is right at the top end of the segment. This is the rich keep getting richer kind of scenario, because this is not investment in smaller companies. And this was especially popular as an investment vehicle within the VC community in 2020. As you can see, that little graph on the side, in terms of value that was placed in SPACs, we saw about nearly $1 billion up until July 2020. Then from August to December 2020, that's what, 5 months, we saw $5.5 billion. And then from just Jan to mid-March, now I know a little bit to the end of March, that figure hit nearly $7 billion in money that is just sitting there. A lot of that has been deployed now, of course, but money just sitting there waiting to be deployed, waiting to buy another company. That's pretty big money that we're talking about. Yeah, $15 billion thereabouts, which is waiting to be invested. And how have they made it mainstream? This has really happened in a short span of time. It got especially popular during the pandemic because money that was normally going into the equity markets, into hedge funds, into different investment funds, they suddenly realized that for some reason SPACs were a good place to park their money. The markets were a bit more volatile during the pandemic, unpredictable. Nobody really knew what was happening in different sectors. So a lot of investors, the general sentiment was that SPACs were a good place to park their money, because if in 2 years there is no investment that is carried out, the company that is running the SPAC is obligated to return that money as well. So within 24 months, if nothing happens, you get your money back. So you're not really losing money, but the opportunity to make money is pretty decent as well. It was just another investment vehicle. Isn't new, I should also say. It's been around for a while. It just got popular then. Another reason it got popular, because you saw a lot of activity from celebrities and athletes in the sports space who were joining SPACs. Shaquille O'Neal joined one, Patrick Mahomes, Serena Williams, Robert Lewandowski, Tony Hawk, Colin Kaepernick, Billy Bean, guys like Peter Gruber. We talked about Golden State Warriors as well. All these big names in sports are combining to set up SPACs worth 300 million, 500 million, 800 million, over $1 billion which they've built as a corpus. That got a lot of attention in a very short span of time. Now, how is this money deployed? Well, I would say not the biggest, but certainly the most famous was the DraftKings IPO. They went public in April 2020, so they were one of the first ones in a nearly 3.5 billion IPO that DraftKings used to go public. Sportradar, more recently in March, just about a month ago, it kind of made it was official. $10 billion they got valued at, and there was a lot of talk. Sportradar was previously looking for an investment round. They were going to go public themselves. All of that information was kind of being bandied about in the market for a good 4 to 6 months before that. And then in March 2021, kind of officially came out that Sportradar will go out with a $10 billion valuation. It's really big money. And even more recently, betting, we talked about this, Betway went public with a 5 billion IPO in April 2021, so super recently. On the right-hand side, you'll find a list of SPACs that we have been tracking. Yeah, you'll see the values there. 1.7 billion, 600 million, Liberty Media, the guys who run Formula One, 500 million, so on and so forth. So really large corpuses of money. Now, what does that mean, really? Like, how do we see this getting deployed? Well, first of all, these are special purpose acquisition companies. So their job is to acquire somebody else. So basically, expect a flurry of M&A activity. I remember reading an article from I think it was the New York Times talking about Goldman Sachs and their M&A team, which is not just in sports and overall in the financial sector, had been more active in the October to December period of last year, in a pandemic year, than they had been in the previous 2 years or something to that effect. They've seen a flurry of investment deals, either to evaluate them or to set a listing price, or or actually to conduct a transaction. But there's a huge supply side. On the demand side, sorry, there's a lot of demand. But on the supply side, how many companies are really out there that are big enough to be of this valuation? Number one. Number two, want to go public with somebody else and are waiting in these market conditions to go public as well. So a lot of factors have to come together for the supply side to get filled up, which is something that we're actually seeing now. After a real flurry till March and even till early April, we have seen a cool down. I would say we saw 42 SPACs announced in 2021 from January to March. In Since the end of March till about today, we were even checking. I was checking with the team today before we came on this event. There were just two further announcements in the month of April. And also reading up in other places, there has been a bit of a cool down in the sentiment of SPACs, simply because now the markets, for whatever reason, in the US, I mean, it's more volatile in other parts of the world, but in the US, things are more stabilizing, especially with vaccination rollouts and things. So the markets seem like more trustworthy investments for big capital. So they're going back there or in more traditional sources. So SPACs are not being announced every 5 minutes, like the way it seemed like they were between January and March. But a lot of big SPACs are still out there. So a lot of still expect the existing SPACs to get into some pretty heavy deal making in the coming months. All right, that's a really financial heavy topic. But just to let you know, we know overall outside of the sports sector, there were 237 SPACs, which raised about $80 billion in 2020. Until March in 2021, from January to March, it was 88 billion. Another couple hundred SPACs. In April, it has cooled down a bit. But there is still a lot of money riding around, not just in sports, but in SPACs in general. Watch this space. All right, so that was about SPACs. Now it's time to get our fangs into fitness. And when we say fangs, of course, we're talking about Facebook, Amazon, Apple, Netflix, and Google. Really big tech. And how are they thinking about the sports tech space? Well, actually, they're thinking about it through the consumer. I mean, these are all consumer-facing companies. They their products and while they have big B2B divisions as well, of course, their products are primarily for the end user. And looking through their own history, it seemed like there was a big battle for the eye. The eye became the big real estate. Like after the mobile phone, what was the next, um, let's say, the giant leap of technology? What was that device that is going to be so pervasive that each and every human being on this universe, in this world, is going to use, which the mobile phone kind of is already, right? What is going to be the next one? So everything around the eye was kind of expected to be that next giant leap. We saw a lot of glasses, Google Lens, of course, and things like that. Google Glass, I should say, sorry. But that didn't pan out for whatever reasons. We saw a lot of movement in the VR space, but none of that really panned out, didn't really translate to consumer for a number of reasons: form factor, lack of tech, or speed of tech, um, uh, 4G, 5G, network effects, all those kind of things. Then it seems like this space, your wristband, is the prime real estate that all these guys are fighting for right now. Yeah, there's a lot of activity between all of them in this space. By that, I mean, let's you can see a little timeline on the right hand side. We saw Google acquire Fitbit in a pretty big deal in 2019. We saw Amazon announce Halo also at the end of 2020. Apple, of course, has been a dominant player in the smartwatch space. They got in there early. It seems that Apple is always one step ahead when it comes to game changing tech with the Apple Watch products. So Apple has something, Google has something, Amazon announced Halo, Facebook has been making plans to launch their own wrist wearable device. Apparently, they were in talks to buy Fitbit, and they were competing with Google for that Fitbit acquisition in 2019. Google took that one. Facebook is looking to do something on their own as well. And not just them. There are other players. Everybody talks about Peloton. Peloton is this giant behemoth of a company, $30 billion in market cap, and going strong. They have announced that they are likely to launch their own wrist wearable. So there's a lot of action happening in this space. This is what it seems like big tech thinks is the entry point to get into the consumer's life cycle because it's activity tracking. It's telling them what the person is doing, where the person is going, and it's mainly connected to health, which is the big segment that they want to invest in. But what are they doing beyond just a wrist-based wearable? What are the other areas that they want to focus on? Well, fitness apps and platforms is another big part of of their thought process. Clearly, I mean, we've seen, of course, what is the recent moves that they've made. They acquired Fitbit, we know, but look at Amazon. Amazon is not just launched Halo, which is their own wrist wearable, which is also, I should say, without a screen. Amazon has gone into a different format, similar to Whoop, which is a screen-less wrist-based wearable, where the wrist is just the band, it's a tracking device, and all the app and all the data is on your phone. But apart from Halo, Amazon has invested in Tonal, Zwift, and in Active in the last year. You can see in November, December 2020, these are the deals that Amazon was getting up to. So they've been super active in not just the wrist-based wearable. Apple made an investment in Beddit, where Apple also subsequently launched Fitness Plus, which is their fitness universe for anybody who's an Apple user. Ben is, I know a lot of you must be. So they launched that. I'm actually curious to know. I've never been an Apple user. I have no interest in any of their products. But I'm curious to know what the feedback has been from Fitness Plus and to see how that has been going. And not just that, Apple has also announced or is expected to launch their own VR headset in 2022. Now, this is interesting because Facebook announced their own fitness move with Oculus. They announced a fitness initiative called Oculus Move, which is obviously around the Oculus VR device, which is connected to VR-based fitness. We talked about mixed reality fitness in our earlier session. There's always so much to talk about from different perspectives on different regions. We can't cram it all into one session. But we talked in the European session about this super new hot trend of mixed reality fitness, XR gaming, which is combining exercise and esports slash gaming, converting, getting you onto your Peloton bike and, of course, riding. But what if you had that with a VR headset? What if you were interacting with a wall around you to do your fitness activities? A lot of cool startups are doing stuff in that space. And Facebook made a big move with Oculus, and they've launched a fitness app for Oculus called Oculus Move. So we expect that Apple will do something similar with their launch of their VR headset in 2022. And this is just another set of interesting activities that FANGs are getting up to. But what else? I mean, who else are the targets and that they might have to keep their eye on? Like we saw, it was a bit of bidding war for Fitbit between Google and Facebook. Who's the next target? Well, I'm going to get out there and say there are a couple of companies. I mentioned Whoop already, who has seen a lot of traction. So anybody who's maybe Amazon says Halo is not really working, and maybe the Whoop audience is a good buy for them to bring into their universe. Would Whoop even be interested in selling to a company like Amazon? Maybe at the right price, maybe not. Who knows? Maybe they're so interested in building their own universe. But we know that all of these companies grow by acquisition. We've seen a ton. I don't have to get into how much they've done in the social media space, in fintech, and other services that they continue to grow in. But within sports, you can also best believe that they will continue to grow by acquisition. So Whoop is one that I would say watch out for. And the other is somebody might put a ring on Ura and get into bed with them. I mean, Ura is another very cool company. Also just announced a funding round. I think it was yesterday. We saw the news that they announced a Series C $100 million funding round. They're getting better. For people who don't know, Ura is a Finnish company that is just a ring, which is the wearable, primarily was a sleep and activity tracker, emphasis on sleep, because recovery and sleep is another huge, huge segment. Whoop also deals a lot in that area. So all of these companies, which are doing really well, very interesting tech. The thing about Ura is that just because it's just a ring, it's maybe less cumbersome than a wristband. Would you wear a ring? Do you wear other rings? Maybe would you wear another one? Um, would you find that more comfortable than a wristband? To each their own, right? But these are the kind of companies that you can easily imagine would become targets for big fitness, for big tech in the fitness space. All right, so that's a couple of topics that we've got through. We've got through SPACs, we've got through FANGs in fitness, and now let's talk about betting. Oof, this betting is big business. Betting is some serious business, right? There's been so much legislation that has been passed. Um, well, not so much. There was one bit of legislation that was passed in 2018, which in New Jersey, which kind of opened this door to allow all the other states to legalize betting, and they have followed suit super quick. 21 states have already legalized betting. This is as of March 2021. 21 states have already legalized betting. Another 21 states in the US have ongoing legislation. It's in some phase of it, some phase of legalization, and 8 states have not yet introduced legislation, but it can't be that far off, right? And the reason for this is that betting provides a large chunk of revenue to the state exchequer. It's not a joke. I think there was one state in the US, we talked about it earlier, but I think it was the month of October they announced, I think it was their second month of legalized sports betting. It was $100 million in additional revenue to the state exchequer, and money which is especially important and especially useful in times like these because they need to support their citizens in different ways, right? So this is another big source of revenue, and the US has brought it on board in a big way. To give you a sense, in 20 of the growth that the segment has seen in 2021, sports book revenue, which is basically the cut that the sports book takes of the entire betting market, is estimated at 2.5 billion. This is likely to be 8 billion in 2025. To get a sense of that market, this cut can be anywhere from 3 to 10% of the total bet value. which is so basically 2.5 billion can be 3 to 10% of the overall market size, maybe even larger. So this is a big market and growing really fast. And for the US leagues, major sports leagues, Martina, you talked about, you asked the question around how innovative are they? They jumped on this, absolutely. And they didn't want it to get out of their control. So a lot of sports leagues have taken the ownership to set up their own partnerships. They want to be involved with whichever organization, company is running these sports books. The MLB, the NFL, the NBA is always the leader. NBA is probably is the cool young kid, is the cool kid from the bunch. Like they're always the first movers. They get the ball rolling with an innovation. NFL is kind of hanging back. They wait to see how it goes. That coterie of 32 team owners tends to be a bit more circumspect. Um, so they hang back, but even they've jumped in. The NHL, which for a long time opposed sports betting, had to bite the bullet and place their bet into the segment as well. And all of these companies, all of these sports leagues have announced their own private partnerships. I mean, this list is already out of date. We've already seen a ton of more announcements from each of them and of different types in different territories because also betting is state-wise. So the NHL might have a partnership with William Hill in one state, with MGM in another, and with FanDuel in another, based on which states have applied to be registered sports books in which states, which is why you see so much deal announcement as well. But basically, all of them have partnerships. So the leagues have partnerships at one level. Teams, they also announce partnerships, right? Because they want to have their own private leagues. And so you have partnerships at multiple levels. Why? Because the leagues and teams want to control or at least get a percentage of the revenue. That is for sure, because they are the underlying asset. The players, the teams, they are what is supporting this whole ecosystem. So they want to make sure they wet their league, shall we say, and get into the action. That's why they set up their partnerships. What else does that mean for the rest of the ecosystem? Well, first up, it was the launch of so many sports books, basically bookies, basically anybody who's willing to accept bets. DraftKings, FanDuel, they of course they were the first movers, not first movers, but they had a large head start given their experience in the daily fantasy game. We've seen Fox launch Fox Bet at the end of last year. So on the broadcaster, we know NBC has invested money in a sports book. Maybe they'll bring a sports book in-house. Barstool Sports, which is basically, well, not really a startup anymore. I mean, they're super well funded. But they announced a sports book. So you're seeing sports books rise in many different areas. That's on one side. A lot of action on the supply side. Another side is the integration with broadcasters, right? We're seeing that each of the broadcasters, whether it's NBC, ESPN, Fox, all the others, they're making sure that they have betting focused broadcasts. Like the ESPN announced, I think it was last week, with the NBA, um, that they would have a completely separate broadcast, which is with betting focused commentators, betting focused graphics, betting focused everything, basically. Um, so to essentially make it easy for that audience to play. So even you can probably place your bet on the TV itself, press the red button to activate those options, things like that, which really make it easy to facilitate bets. So a much deeper integration with the broadcast feed. So that the broadcaster also gets their piece of this betting pie. Everybody's looking for their entry into it. That's on one side. And of course, the last bit is a ton of deal making. Flutter, I talked about, so investments and acquisitions, because all these guys have a lot of money and they want to get bigger and bigger. But Flutter was basically born out of Betfair and Paddy Power, which merged in 2015. A long time back, these really large betting companies, they acquired Stars Group in 2020 or 2019, I believe, $7 billion deals, made it the biggest betting company in the world. And they are the ones who own FanDuel. So I mean, there's this size of deal making happening, with acquisitions happening all over the place. DraftKings announced that they were sitting on a cash reserve of $1.8 billion. They made this announcement at the end of last year. And they're also adding another $1 billion that they want to raise to make their own acquisitions. Again, expect a lot of money floating around, deal making happening. I spoke about NBC. They invested 75 million in they, they invested 75 million in PointsBet, who further and made an investment in Banach Tech, which is another cool piece of technology out there in the market. So a lot of deal making, a lot of acquisitions happening in the space, and expect this all to lead to an explosion in the betting market in the US. Why this is also important is because this will set a trend, a benchmark for the rest of the world to learn from, for sure. Um, you're going to see a lot of countries, India, Brazil, who are going to be keenly watching the betting action, and you all know how it's going to go. It's going to generate a lot of revenue. They're all watching keenly what happens in the US so that they can perhaps replicate that in their markets and generate their own level and generate it for their own tax exchequer. Because illegal sports betting is rampant everywhere. It's already happening. It's just the governments have to decide whether they want to bring it into their fold or not.